Hey everybody, it's Farnoosh coming at you from my Brooklyn apartment. We are renting an apartment here in the city. We just sold our apartment. More on that in a moment. I wanted to just pop in and share some thoughts about what I'm feeling as we are all probably so frightened, so worried about the spread of coronavirus, right? We're doing all the things that we're supposed to be doing, washing our hands, not going into mass public spaces. We're keeping the kids at home as much as possible. We're just trying to take safety precautions, right? That's what we're supposed to do. And we're just crossing our fingers, right? And we hope that anyone who gets it is gonna get the help that they need and will recover. But part of me is also, maybe it's my job, I'm just starting to get really nervous about everything that I'm reading and seeing in the market. A lot of you have been writing in, feeling almost like it's inappropriate to ask questions about your stock portfolio or retirement or should I buy a house, because it feels sort of ill-timed, right? We're so focused on keeping ourselves healthy first and foremost, which absolutely our health is our number one priority, but our financial health is also important and it's at risk right now. So I want to be here to help you and give you some answers to your questions and kind of go through all of it, right? It's like, what do I do if I lose my job? What happens to my 401k as the market continues to fall? Should I stop investing? What if you're thinking about buying real estate like my husband and I are? Like, we have no idea right now. Right now, this is the sort of stuff that I'm grappling with, and I wanted to do this video just to kind of get it all out there and get your comments as well. So stay tuned. I'm going to give you a lot of answers to your questions and kind of go through all of it. But let's take a big step back and just talk about what this coronavirus has been doing at large to the economy, to the financial markets. One, the stock market has been taking a nosedive, a severe beating, right? And why? Because investors cannot wrap their arms and hands around this virus, literally and figuratively, right? They don't know where it's going to go next, what industries it's going to completely cripple, where profits are going to continue to fall. And so that uncertainty, breeds fear, and fear breeds a calamity in the stock market, which we have seen over the last week or two. Secondly, in reaction to the market tumbling, what happened? The Federal Reserve, who's in charge of helping us keep our economy stable and strong, they decided to reduce interest rates. Why do they do that? They want to get people to go out there and stimulate the economy, right? Rather than putting your money in a savings account earning 0% and now probably earning less than that because they reduced interest rates, they want to incentivize us, you and me, to go out there and spend our money, to put it into the businesses that are losing money. And that, in theory, should work, but here's what's also happening amidst this crisis, which is sort of making a lower interest rate environment not a big deal, not exciting, is that people are losing their jobs, right? Or they're getting their hours cut back, or maybe they're in a job, but they're concerned that when, all of this kind of subsides, that companies are going to look at their bank sheets, they're going to look at their balance sheets and go, okay, we gotta downsize. If you are concerned about losing your job, I don't think that any reduction in interest in the interest rates is going to motivate us to go out there and, spend money. I mean, unless you're just buying Purell and canned chicken noodle soup, which is what I'm buying, there's really not a lot of discretionary spending that's happening, at least here in my house. So this is all the stuff at a macro level that's happening. And there's other stuff too, but these are sort of the bigger tentpole issues that I see. And there are definitely going to be trickle-down effects to our purse strings. So what are we really talking about, right? We're talking about a pending recession, consecutive negative growth in the economy that a lot of people have been talking about and forecasting for the past 2 years. It was the most forecasted thing. And now I think we're ready for it. We are in it. Probably we'll look back and say this is when it all kind of really started. And the coronavirus just kind of catalyzed it. And for those of you who lived through the last Great Recession, you know what that feels like. It's painful. I lost my job in the Great Recession. And yeah, it was awful. What happens in a recession? Businesses contract, consumers don't really spend. Sometimes real estate prices do fall, and people just generally have an overall, concern and malaise. You might lose your job, you might not, but if you've got debt, if you've got retirement, these are the things I want us to be thinking about. Number one, Save your money. Right now, if you don't have any savings, start. It's always a good time to be saving, but now is even more important to have money in the bank. If you're not already, start getting into a savings regimen, whether that's just 10 bucks a day, $50 a week. I'm not gonna stand here and say, go stop drinking your $8 hemp green smoothie, because if that makes you happy, good. But I like to find ways to save money in the sort of invisible stuff that we're spending on. Think about what are some of the recurring expenses that you have that are sort of invisible. Car insurance, home insurance, your gym membership that you're not really using. You know, these sorts of recurring monthly bills that we're happy to have, but we don't really feel the benefit every single day. And frankly, we could still have them in our lives at a reduced rate. So in the recession, I'm taking a page out of the 2008 playbook. My mother lost her job. First thing she did, she called up a bunch of her billers, her gym, her utilities company, car insurance, cable, cell phone, home insurance, and said, I lost my job. I would like to see what you might be able to help me out with. You know, can you give me a couple of months free? Can you reduce my rate by 20%, 50%? And one by one, she just checked it off her list and was able to reduce her monthly expenses in those categories in total over $400 a month. You'll be surprised, you might actually get some really great kickbacks or a couple months at no expense just to keep you on their books, because the last thing these places want is to lose business, right? It's worth the exercise. So do that, maybe do that now before things get really hard in case you do lose your job. That's a really tough time to be scrambling to get all your financial ducks in a row. So looking for ways to save money now. This is actually the time to do it. The worst time to be thinking about this stuff is when we are actually in the recession, you've lost your job. So do it now, do yourself a favor. Pro tip for married couples, try to live on just one person's income. If you're both making money, what if one person becomes the saver and the other person becomes the earner? This is how a lot of my friends have saved up for weddings, houses, cars, travel. How do you save up for a recession? Live on one income, because the reality is you might only have one income in the next 6 months or in the next 12 months. Okay, and here's some other a little strange advice you probably are surprised I'm gonna share with you right now, but I would say that if you don't have at least a few $1,000s or at least a month or two's worth of living expenses tucked away, this is not the time to be aggressively paying down your debt. I'm not saying don't pay your debt, just pay minimums on all your debts for a few months for the next, however long, so that you can bulk up savings. Because that's just where we are right now in the world, right? We are uncertain. And when we don't know what's to come, your best defense is having cash. And by the way, interest rates are coming down. So while you're calling up all of your billers, call up your lenders, call your credit card companies, your banks, your student loan company, your mortgage company, and talk about how can I bank on these lower interest rates? Can they just drop them for you? And just prepare, if you are going to be applying for a mortgage refinance, that could take a while. There's a lot of people applying right now for obvious reasons. They want to bank on these lower interest rates. But if you do have a mortgage that's like over 4.5%, 4%, and you plan to be in this house for many years to come, and the savings that you're going to make on this interest is going to ultimately outweigh the closing costs, because there will probably be closing costs associated with your refinance, then I think it could be a smart plan. Just make sure that you've got time and be patient. Another thing about debt, if you're really struggling, I would right now call the National Foundation for Credit Counseling, nfcc.org. This is a nationwide credit counseling agency. They have certified credit counselors all over the country. It is free, the first meeting. I've been recommending them for over a decade. I love what they do. I have no incentive in recommending them other than that I want you to succeed. This is not a get out of debt quick scam or anything like that. They work with you over a number of months and years to help act on your behalf as your advocate, calling your lenders and getting your rates reduced, getting your debts in a place where it's more manageable for you and you can have some more wiggle room in your budget. All right, are you still with me, friends? Okay, so let's talk about investing stocks. Not my favorite topic, and you know me, I don't go deep into picking stocks, but I have experience investing. I've studied it. I can give broad stroke advice. I will say this, don't buy into the hype. If you're interested in the market right now because, oh, stocks are falling, this is a hot time to buy, don't just buy one stock, buy a bunch of stocks, diversify. That's rule number one. That's a rule that doesn't change whether the market is doing well or crappy. Diversification is your best way to mitigate risk in the market. So yes, if you haven't ever started investing and you want to get in and you have access to something like a 401k at work, or you can open up an individual retirement account, do that. A Roth IRA, a traditional IRA, a 401k, all those are great retirement savings vehicles. Get in now, start saving automatically, but again, do it in a diversified way. You can buy an index fund. You can buy an exchange traded fund. An index fund, just real quick, is a fund that is made of a basket of stocks or bonds, and they typically track an index like a broad market, the S&P 500. An exchange traded fund, similarly made of a diversified number of assets. There's a theme. It could be like energy or green stocks or the US stock market. This is the thing that we forget. Markets are cyclical. What's happening right now in the market is not, honestly, it's not unusual. This should have been expected. The market is doing what it needs to do. It is efficient, and we just need to let it play it out and ride its course and trust that over a long period of time, if you are a long-term investor, and I only like to talk about long-term investing, that this is going to pay off for you. Okay, what if now you are interested in real estate? Okay, and this is now my love language. I love talking about housing, real estate, property. It's my jam. But I have to say right now, I feel like I'm at a crossroads. I really don't know what is the best decision, whether I should rent or buy. I will say this, if you don't have cash in the bank, enough where you buy a house and you still got cash in the bank, I don't think you should be buying a house right now. It's not really a good time to buy a house ever under that circumstance, but especially now, because if your job does go away, if housing crashes, if the market softens at least and prices fall and you were the one who bought at the high, well, that's going to be a problem for you too. So I'll be very honest here. My husband and I were looking to move to a particular suburb. We were living a block away in a home that we owned for about 9 years, and it was glorious. We raised our kids there. I mean, they're still little, but we've now sold that apartment, living in a rental. Why? Because the bigger goal was to move to the suburbs, but we had to do it in steps, right? We had to sell, and then we didn't want to leave before the end of the school year, so now we're renting for a little bit to kind of just buy ourselves time, but also because we want to now use the equity from the home that we had and use some of it to buy our next home in the suburbs. So I have to be now really smart about where I put my dollars and cents. We're purposely only going to commit 40 to 50% of the equity that we made in the New York sale into the suburb sale, and then the rest we're going to bank. So now, we have found a home that we like, take that back, that we love. It's in a great neighborhood. We love this street. The house is beautiful. It's got a backyard. I mean, it would be great for the kids and us. But I'm starting to really hesitate because it's so touch and go, right? Like 4 days ago, I was all in. Today, I'm like, I don't know, should we just, pass on this house and keep renting and still move to the suburbs, but rent there, even though there's not a lot of renting stock. We'd have to live in another cramped apartment. But you know what? If it means preserving our cash and our liquidity, which goes back to my very, very first tip, which is, make all of your financial decisions by first assessing your liquidity, your cash stance. How much do you have in reserves? Can you make this move? Can you take this, potentially small risk or medium-sized risk and be okay with it if it completely blows up in your face because you've got, a savings cushion? And, I'm not completely risk averse. I'm okay with taking a little bit of risk, but not a lot of risk. Wish us luck. But you know what? It's hour by hour, minute by minute. 3 hours ago, I was a renter. Now I'm taping this video, I'm like, buying, but we'll see. Keep in touch. And that's my first video, everybody. You know, if you've been following me, you know that I've been wanting to start a YouTube channel. This is my first video, and it's not as fancy as I thought it would be, but that's okay. I wanted to get this content out to you ASAP. Timing is very, very important right now. We want to have the answers. Knowledge is the best commodity. So apologies, this isn't really a lot of bells and whistles, but as we grow the channel out, hopefully it'll get more robust. But the best thing, the most important thing that I care about is answering your questions. So leave your comments below, leave your questions below. I want to just, you know, crowdsource this and make this all about helping you. So thank you so much for watching, and I'll see you next time. Adios.